Hello everyone, in this video we'll be talking about Hyperinflation Stabilization Program. Well, in case of hyperinflation, there are three ways how government can control it. Number one is through fiscal policies. Number two is through monetary policies. And number three is through income policies. So, for clarity, fiscal policies are policies by the government, monetary are by the central bank, and income is a newly introduced term over here just for hyperinflation stabilization. Okay, we know that government are supposed to print currency in case of budget deficit, okay? And budget deficit is when expenditure is more than income. So, government can either decrease their expenditure or increase income in order to stabilize the inflation, hyperinflation. Now we need to know how can government do so. Government can increase its income. We know that a source of income is taxes, and another is printing money or seigniorage, and seigniorage has done enough bad for the economy, so we are not even considering it. Now we have tax. Do you think that in a country with that inflation people will even agree to pay more taxes? No, that will not happen. So you don't need to increase your taxes, but you need to change the tax composition, which means people are already paying inflation tax as a tax. Now it is duty of government to make sure that the tax what they are paying for inflation is diverged into a direction that can actually be good for the economy. Okay? And the second thing that government can do is reduce expenditure. And they can do it by either decreasing subsidies or transfer revenues, or basically any transaction that government has to do to the public, or to make any kind of to buy assets or anything to pay debt, interest payments and all. Government needs to make sure that it is decreased to extent until and unless hyperinflation comes into control. Second, we have monetary policy. In order to make sure that the hyperinflation prevailing in the economy is under control, central bank needs to make sure that they don't buy bonds in exchange of currency. Because we are well aware that government cannot print notes. In order to get notes, they will sell bonds to the central banks. So if central bank denies to buy the bonds, then there's no way government can actually print currency for itself. So here was a second reason. Now coming to income policies. Unlike the previous two, income policy has to do nothing with government or central bank, but it has to do around hype generation. If you've ever paid attention, then even the idea of inflation in anyone's mind can actually increase or decrease money demand in the market, right? So income policy basically focuses on making sure that there's no hype generated around inflation. Because, for example, this is a firm, and firm is sure that there's not going to be any increase in inflation in the coming year. So accordingly, they know they will not have to increase wages not to increase. As a result, they don't have to increase their prices, right? Similarly, if the employee knows that prices are not going to increase in the future, then they will not demand more wages. And such stability does not only happen on a firm level but individual level, and that is exactly what happens, which can actually prevent hyperinflation or contraction or any sort of activities taking place around the hyperinflation. Now, another thing that you need to know is any stabilization program that income policies involves income policies, are called heterodox, and those who do not include income policies are called orthodox. Now you may ask, is there any possibility that these stabilization programs may fail? So yes, there is possibility of failure in these programs. There are basically four reasons to it. First of all is botched effect at stabilization. It basically means that the government and central bank did nothing but just try to impose the income policy, which is just to create that hype that there's not going to be any inflation the coming year, and that alone is definitely not going to work, right? Second is insufficient measures taken, which again means that the government or central bank didn't take or make enough efforts in order to decrease hyperinflation or to bring it in control. Third is social conflict. As we know that during hyperinflation, people or the money holders are forced to pay inflation taxes. So there's a possibility that people may come together and may protest against paying taxes or seigniorage, or may question the seigniorage. Okay, so this is the social conflict, and the last one is anticipation of failure. Whenever you introduce a program, you cannot assure 100% success, right? There's a definite amount of failure involved as well, or anticipation of failure, right? And that is what we are talking about in this property. And with this, we are done with this chapter, which is high inflation. Thank you.